I want to thank everybody for joining us tonight. This is the third in our series of the seed planting webinar hosting that we've been able to do, where we've over the years realized that so many folks have a lot of questions or interest in some of the things that we've learned how to do well over the years. And so we wanted to create this opportunity and learning series for folks to see what we're up to and pick our brain. And so we've done sessions on fair housing and how to buy investment property. We have another session coming up on maintenance. So hopefully you'll be able to tune in for those things as well. I'm going to go ahead and introduce the folks that we have on our call tonight. So Grace, if you advance the slide, this is the exceptional team that we've got sharing with you a lot of our industry expertise around buying an investment property. A lot of folks have asked me how I got into this business. And if you know a bit about my background, I actually had a 15-year career in nonprofit management and then made a ginormous and what you might consider seismic shift in my professional trajectory by starting a management company. But if you were friends with me, you knew that early on I had a strong interest in investing in real estate and being a landlady. And over the years, I was able to put together a pretty small but impactful portfolio of properties that I got to manage over the years, and had a really great experience doing that, and felt like I had become just really engaged and excited about the opportunity to give people not only a great living experience, but great spaces to live in. And knowing that I was responsible for people feeling safe and happy in great places and spaces, in some ways felt more impactful and meaningful to me than my career in the nonprofit world. So, from the beginning, we've always considered ourselves a values-based, purpose-driven company. We believe that when we give people a great place to live, they make great tenants. And when people are happy where they live, they also make great community members as well. And that's just better for everybody. So we've been hanging our hat on those values and principles from the very beginning. And we believe it's part of the secret sauce. We're happy to share it because we feel like if everybody has a great living experience, everybody's better off. So this presentation is definitely anchored in those values, and will, I think, highlight some of the things that are less obvious about real estate investing, and also the things that we believe actually have the most impact. So today we're being joined by Emily England, who is our business development lead. She spends a lot of time talking to folks about what kind of property is gonna meet their needs for investment. And for some folks, that investment is where they live at first. Steph Wicko is the Senior Vice President of Nest. Esser is our Director of Client Success, and making sure that all of those tenants that we work with day in and day out are having the experience that we promised and the one that we intend to deliver day in and day out. Pavan Kupchandani is our general counsel. He makes sure that we're on the right side of the law all day long, and there are a lot of laws that impact this work, and in particular the work that we do in Washington, D.C. proper. It's a complicated environment to have rental property. It doesn't mean it's not possible. It definitely is, but it tends to be more restrictive and pretty nuanced in terms of what kind of latitude and work you need to do in order to ensure that you're compliant with the DC condo or DC tenant rights. And then Grace Langham, who kicked us off, who's the president of Flock. And so we'll kick off the next slide. I'm going to walk you all through what we want to cover today, which is the two different kinds of real estate investors that we're most familiar with. And one is the accidental land folk. I don't favor the landlord term, and I think it can certainly be reimagined. And so why not just start now? Some folks, a lot of folks, myself included, got into this industry or into this interest in investing in property because they lived someplace that was no longer the right spot for them to call home, but they didn't want to sell it. And so they decided to repurpose that property and place it into service as a rental. And some folks did that very intentionally. Some folks, it was quite by accident. They realized it may not be the best time to sell, or they weren't ready to sell, or there was some other disincentive for doing so. And the low-hanging fruit, or the obvious next step, is to make that unit a rental. That landlord or land person tends to be a little bit less informed when it comes to how all of the different layers of management unfold. But that said, that doesn't mean it is or should be a bad experience. I think the more we learn about how to do it well, the more informed we are, the better the experience can be. And even if you didn't intend to be a land owner and property manager or to have real estate that you rent out, it doesn't mean that it isn't a good experience. And then we work with a lot of folks that are very intentional investors, and they're interested in targeting and building on a portfolio of properties that they have a certain interest in having what you'd call a cap rate and seeing a profitability from those investments over a period of time. And we're going to talk about that. We're going to talk about really the math of operating a rental property and what that looks like. And a lot of the costs that you would assume and build into the day-to-day operational costs of managing property, and then some things that you don't always factor in. We'll talk about what is the right investment property. So for any of those folks on the call that are trying to get into the market, this will be an opportunity for you to sort of see the pros and cons of the different kinds of investments you can pursue. And then once you have that home and that investment property, and I do like to use the term home because it may be your investment property, but I can't underscore enough that it is someone else's home. And that's an intimate and an important role that we play in making sure that that home experience is safe and high quality for everybody involved. But to do that, you have to be willing to take the time and to be incredibly intentional about making sure that the property is in not only good repair, but that people are feeling like it's safe and well maintained, and that it is meeting their needs for housing. And that's not always it's just a rental mentality. In fact, that's a mentality that we really discourage people from factoring in. It's just a rental is not the case. It's actually someone's home. And again, I can't underscore that enough. We're going to talk about fair housing and why fair housing is everybody's right, and it's also everybody's responsibility. And that's most true for anyone that owns and rents property to other people. We want to make sure that there's equity, that we're discouraging disparity, that we're and doing all we can to prevent discrimination from happening in the housing industry. And unfortunately, it does not enjoy a strong reputation in that respect. So we want to make sure that we're certainly not adding to that negative history that the industry can have. And fair housing gives us some framework to make sure that we're doing that. We're going to talk about what does rental property look like when everything is going well, and what does it look like in, pandemic times like now. And I think there's both good and some challenging news in providing that overview, and you'll get to see some trends that we've seen play out during this particular time, and to give you a sense of what you might want to prepare yourself for as you aim for a long haul investment. So if you're interested in buying real estate, holding it for a year or two and then selling it, obviously the long-term proposition is a different one. And for the most part, rental property doesn't perform well for short periods of time. So it's really a long game to have rental property in your portfolio. And finally, how do you protect your investment, your residents, and yourself? We're going to talk about kind of the legal exposures that you have, the compliance issues, and other details that you want to make sure you're on top of to be sure that you've got the right experience unfolding and that you're checking all the boxes from a compliance perspective. And how you find yourself the ideal tenant. And we'll open up Q&A. We'll be able to move through this content fairly quickly, and we'll open the floor up for conversations that we know people had some questions that they put into their RSVP, and then we'll be happy to entertain questions at the end. I know that this is obviously a topic we all like and care about quite a bit, so we hope that you do as well, and we're interested in having that conversation. So we'll go to the next slide. And I'm going to talk through the income side of the rental market environment and what you can expect. So it really comes down to the very simple monthly rental rate that you'll want to focus on when you factor in what your potential for profitability and operating looks like. If the rent is $2,000, more or less, that's going to be the maximum amount of income you should be able to really count on. There are other environments where you might be able to charge fees. If you are buying something that has multiple units, it's possible there's an amenity or another service that you might see revenue streams from. Interestingly enough, some of the laundry services can generate not an insignificant amount of income, but I don't encourage people to lean on those fees as a way to drive income, but instead to encourage certain behaviors. And by encouraging certain behaviors, I mean fees should inspire people to be thoughtful and responsible in how they interact with the property. If a laundry service is free, sometimes we'll find that it's not as well cared for. So there are different value propositions to adding fees that really aren't aligned with income, but more so making sure that the property performs well physically, and that the tenants are taking responsibility for how that property works. And I do want to point out early in this conversation that a lot of times we think of tenants globally, not in this company at all, but in sort of with this pejorative lens that they are hard to work with, or they can be frustrating, or they're demanding, or they're nitpicky. And to be honest, I think just like anywhere else, you can have a challenging tenant, but you can also have really exceptional tenants. And we find that that's the case, and we like to call them residents. We find that's the case broadly, that if you are delivering an authentically good experience in a great space, then you should be able to expect a good experience on both sides. And that is not a hard and fast rule, but I find it's typically a formula we see unfold in the industry. So while you have the hard income component of managing and owning a rental, and that rental income being your primary source of income, there are a lot of other passive incentives for owning real estate. And I'll provide the asterisk that you should always check with your accounting professional to make sure that you understand how owning and holding a rental property impacts your taxes. But generally speaking, folks will be able to deduct the cost of operating that property when you have a property. Even if it was your home at some point and you convert it to a rental, you're starting a business. And as with all businesses, the costs of maintaining and managing that property become tax deductible. So if you lived in a condo, for example, and you're responsible for your condo fee, the condo fees would not be tax deductible for an owner occupant. However, if you have a tenant and you have expenses on the condo fee side, because that rental is now a business, you can write off things that weren't available for you to write off in the past. So that is one of the less obvious perks of having rental property, is in the idea that you may be able to reduce your overall tax burden as an individual. There are also depreciation components. The IRS does require that you depreciate your property over a 28.5-year period. The IRS is basically telling you that they believe having a rental property, whether you agree or not, and we would disagree, that the property will decrease in value over time because of the use. And they're building in an incentive for you to hold that property, and you depreciate a proportional amount each year over 28.5 years, which further reduces your tax bill in the year that you take the depreciation write-off. But you're going to have to pay up when you sell that property, because the IRS will actually want to capture those write-offs at the end. But in an operational sort of day-to-day way, that can be pretty impactful in terms of taxes. So as you do your tax planning, let's say, for example, that 28.5 years starts to sunset, when you're looking at a retirement period, your tax basis may be a little bit lower at that point. And so it may be a better time for you to realize that income, or to pay on the depreciation that you've already captured. Those are all accounting nuances that, again, chat with your accountant about how that works. But again, maintenance, repairs, improvements, and the the different advertising costs, all of those things become tax deductible through a Schedule E that you fill out when you do those taxes. So I'm going to leave it there. I'm going to have Steph Whitco chat through the expense side of things, so you have a better understanding of what it costs to get your rental fully operational.
Hi, everyone. It's so good to see some familiar names and faces on the call. I'm going through the fun part of the maintenance, upkeep, and operations. We've been meeting, obviously, with owners for a very long time doing this, and we do try to be as transparent as possible when it comes to the expenses that you're facing. So as Lisa mentioned, you do have kind of the hard income coming in, and a lot of times we meet with owners who say, I have to make this much to be able to move forward with the rental process. We definitely want to be transparent so that it is not a frustrating process as you go down the line of having maintenance issues pop up. They're going to pop up whether you became an accidental landlord or you went after an investment property that is brand new. Um, in any scenario, there will be maintenance, and we try to make sure that people are prepared for that. The first bullet point here we'll see, and we'll kind of walk through them quickly. Utilities. Obviously, these maintenance issues are going to differ depending on whether we're talking a single family home, a condo, or a multifamily building. You're going to have different things pop up. For utilities, if there are common areas, so you're talking there a multifamily, a multi-unit building, you would be responsible for more of the utilities. Otherwise, those do become tenant costs. So tenants are responsible for gas, electric. Water is an interesting one, which I will just quickly say because most owners are surprised to hear that water in DC is tied to the deed of the property. So we typically do not have tenants put the water in their name. But again, that's totally up to you if you were going to go about this on your own in terms of getting tenants, and we can happy to answer any questions about that later. But again, the utilities are a piece that you would hand over to tenants as you're budgeting for the most part. Preventative maintenance, we have a number of things that we recommend doing scheduled. So obviously biannual HVAC service. Landscaping is an important thing. Obviously with the homes, not, I won't say no tenants want to do the gardening and the landscaping, but we have had some. It is an important thing to, if you have neighbors that care how the yard looks, because that is something that we get often, it is not a bad idea to invest in landscaping service if you have someone good and you want to keep them going to provide that for tenants. We do suggest gutter cleanings, snaking drains to prevent any water issues. As we all know on this call, water can be the biggest cause of damage, so want to definitely stay ahead of that as best we can. Pest control is a big one in the city. You will obviously, if you've owned a unit downtown, you've heard of the mice issue. So we try to definitely stay ahead of that and recommend that owners get put on a regular pest treatment schedule. Fireplaces are another thing, dryer vent cleaning. So all of these are things you just want to keep in mind. We do typically say if you were going to average out expenses in a condo, expect around $2,000 across the year for smaller maintenance issues to pop up, preventative issues, and then for houses all the way up between like 4,000 and 5,000. We tend to tell owners is key. That does not take into consideration though the appliances, like knowing how old your roof is, knowing how old your appliances are. Those things will also make a difference in terms of planning. So wanting to make sure that you get those ducks in a row and all the information that you can during the buying process. And then over here, we kind of mentioned turnover costs. That is the space between tenants. So in DC, tenants do expect that a unit is turned over to the appropriate standard to have them move in. We have a high standard because our tenants do, and we want to be transparent about that. If a unit has been lived in, you can expect painting, you can expect caulking, you can expect potentially some minor renovations, but going in and replacing toilet flappers, all of those things that will hopefully pay off in the end are things that we recommend doing and that we will work with owners on to make sure that those get done between tenants, all at a cost to the landlord. So those are things that we'll keep in mind and kind of chat through as we go. And then we had done a prior session, as Lisa mentioned, on buying your first home, first-time home buyer session, and we went through your team. So this would kind of be just something to keep in mind as you go through the planning. Would be a legal team, a tax prep team. You know, you're going to have your real estate agent, banker, title company, contractors and vendors. Obviously, if we work with a management company, we would come with that insight and go over all those fees with you ahead of time so you know, but also things to keep in mind as you are going through the expense side. And we do spend a lot of time chatting through owners with this who don't end up moving forward, whether that be because the management side is too much at the time and then coming back later for management, or they don't go forward with the purchase of the property because at the end of the day, it's just not something that they could afford with all of these expenses in mind. And so once again, I can't stress it enough, be transparent, you know, make sure that you get all the numbers that you can written down and make sure you have a plan because we do not want there will be things that come up that are frustrating as a landlord, but we want to make sure we get ahead of as many things as we can. So I will send it over to Emily, who's going to talk through condos, co-ops, and single family houses.
Thank you, Steph. Hi, everyone. I'm Emily, and as Lisa said, I work a lot with our new owners and new properties that we're bringing into our portfolio, whether they are condos, single-family homes, multifamilies. So I'm going to run through some of the considerations to think of when you're researching the investment that's best for you. I think when I look back and reflect on kind of some of the purchases I've made, and what happened when I was researching kind of those properties. When I got my condo, I was looking at really the ins and outs of everything that I needed to think about. So I'll share that with you. The first thing I looked at was kind of the cash reserve that the building had on hand, the condo building. They had around $300,000 in their cash reserve for a 28-unit building. So going in, I knew they were in a really strong cash position. They did have an elevator, which can be a really big cost, and that is a really big maintenance consideration if they didn't have such a strong cash reserve. But with that, I knew that, you know, if we were to be in a position where something happened to the elevator or the roof, or you know, there was a large unexpected cost, then we had plenty in that cash reserve that wouldn't result in a costly special assessment. The other thing I looked at was rental restrictions. So on the onboarding side at Nest as well, I get this a lot. There can be rental caps or waiting lists for a building. So if you are looking at having it as an investment property, then it's really good to know what those are ahead of time. In this instance, there was a really high rental ratio in the building of 40% and no rental cap or waiting list to rent. And doing the math, I kind of figured that in order to change those rules in the building docs, then you know, they'd need 2/3 of the owners to vote to restrict that. And with 40% already being rented in the building, that just wasn't a likelihood. So have a think about that. If there is a rental cap or a waiting list, that can be a really big exposure if you weren't planning on having that vacancy. If you are on a waiting list and it's going to take months to be able to rent your property, then you want to know that ahead of time, and you want to know how long that rental wait list is. And you can get a lot of information from the condo resale docs. So as a buyer, you are entitled to review all of the condo and resale packets, so that you can see meeting minutes and see any issues that have come up in those. You can see the cash reserves. You can tell what issues the building is having from those minutes, and what's discussed in those meetings. So those are kind of some of the things to consider aside from the aesthetics of the condo and you know, whether that's a good purchase for you. With a condo, there are a lot less environmental exposures, and it can be less stressful and burdensome. So snow removal, landscaping, those things are taken care of the building, common areas taken care of the building, and that's what your condo fees go to. But there is also so much new construction in DC, and we've been saying it now, there's almost a condo for everyone being built in DC. There's so much new construction constantly. And so from an appreciation long-term investment, it may not be as high as a single family home or house row home, but that is another consideration to kind of think through. Co-ops, they tend to have a lot of rules and restrictions in our experience, so it can be more difficult if you are looking to purchase a co-op as an investment. To have that as a long-term prospect, and kind of what comes with the rental process. So definitely have a look into that in quite a bit of detail if you are interested in purchasing a co-op. And then single family homes and houses, they are certainly less restrictive, but there are other considerations, such as there are more systems to maintain. You are responsible for kind of sometimes the landscaping and snow removal, depending on, you know, what you're putting in your lease with your tenant. You do get disclosures when you're closing on a single family home. However, those can be not full disclosures, I suppose. So there's a lot that people can say they don't know So I don't know how they don't know when the last time the roof was replaced, but they often say that. But do get a really detailed inspection report so that you know what's going on ahead of time. You know if there's any serious issues that you'd need to take care of ahead of time before you start that rental process. And single family homes are really great because there are a finite number of them. So contrary to the condos, there's just a finite number of houses and row homes that you are able to purchase. So the potential for significant appreciation is a lot higher, even though there can potentially be less cash flow up front. But if you think about it over the long term, it could be a really good move. The multifamilies, they are unicorns. If you find a good 4-unit, let me know. They are great, although rare. But if you do find something that's 2+ units, the number one thing I see on the onboarding side at Nest are people being told that they do have a 2 legal rental and that they are purchasing a legal 2-unit rental. And Parvin will touch on this a bit later on, but do make sure that if you are purchasing a multifamily, that there is a certificate of occupancy for the building, and that would be directly related to kind of the compliance side, and making sure that you know, even in the 2-unit where there's an upstairs and a basement unit, the basement would need to have the building would need to have that 2-unit certificate of occupancy to be in compliance and have everything above board. So there's a bit to think about when you're looking at kind of the different types of properties, but there's certainly a lot of considerations and pros and cons to both to all types of properties. So hopefully that's helpful in thinking through different ways that you can approach the different types of property for your long-term investment. And with that, I'll pass it over to Essa.
Hi, good evening, everybody. So the next step in this process would really be, getting some tenants into your investment property. And so while you are considering to put your home into service as a rental or looking into buying a rental as an investment, another consideration is really the experience that you're going to be providing. As Lisa mentioned, you're not just buying a physical property and the 4 walls and appliances that are inside, but you're going to be creating a home for someone. And so as you're looking around, looking at the materials, the finishes, the types of appliances that are going to be in this property, and the experience that that's going to create for your tenant are what we think a very important consideration and a key ingredient to having a successful rental. As Steph mentioned, the costs of maintenance are going to come up. It's just a matter of when and not if. And so buying and maintaining quality appliances, and not just replacing them with, the cheapest option, is going to be an important factor. Looking at the flooring, looking at the type of cabinetry that you have in the kitchen and bathroom, all of these factors may not be front of mind when you're shopping around. You're just kind of looking at aesthetics and how many bedrooms it has. But it's important to consider that, because if you don't have good quality finishes, then you are going to be replacing them more frequently, and that's really going to eat into your income and your revenue. The other factor to that is the tenant's experience. As we believe at Flock, having a happy tenant is a key part of having a successful rental. You're more likely to retain long-term tenants. You're more likely to get pushbacks and complaints about smaller issues when the tenants know that you're going to take care of them and that they're living in a good quality home. So you really want to be looking at those factors. And inevitably, when things do pop up, being responsive, making sure that you're hearing your tenants, and really considering what they're going through. It's very easy to think, oh, it's just a rental, whatever. But considering your tenants as individual people with different sets of expectations, different sets of requirements for their home is going to help you be a better land folk, help you be a better owner of the property, and keep those tenants in place so that if you do decide to raise that rent at the end of the year, you know, tenants at least feel like they're getting a good value for their home. Um, the other, you know, the non-mechanical side to consider too is, especially in a condo or co-op, is you may also run into some conflicts and dramas with boards, with neighbors. We've certainly dealt with our fair share of that, especially in the pandemic year with people spending a lot more time at home. And so while the mechanical side can be very easy to manage, oh, my stove is broken, I need to repair or replace it. Dealing with the personalities and challenges of buildings and neighbors is something else to consider. And so being fair to your tenants, being realistic with what they're dealing with, and being a support system for them is a key part of managing your home as well. The other part of looking for tenants is complying with fair housing. As we know, it's a really big part of the tenant search. And a lot of times we'll see people advertising for their rental properties inadvertently violating fair housing laws. So it's important to do your research. You know, the key basics to this are treating every applicant equally. And so making sure that you're offering everyone an application that asks for it, making sure that they're seeing the same property, you're offering showing times to people and not denying people showings. And then having very clear expectations around your qualifications and your application process and staying consistent with that. And then really just understanding the law. There are some good resources out there to make sure that you're complying with that. The Office of Tenant Advocacy, while it's a resource for tenants, is a great place to go to also see what tenants are aware of as far as their rights. Um, some easy gray areas and not even gray, some illegal areas to slip into are things like profiling your ideal tenant, saying something in a listing like perfect for a couple, perfect for your, you know, your family or your kids, or this room is great as a nursery, is a way to profile tenants and actually discriminate against someone who wouldn't fit into that category. You also don't want to discuss anything like crime rates, schools, other residents in the building if you're renting in a building. Those are ways to steer people to a decision. And so it may be, you know, your intention to be forthcoming with info and helpful to try to sell your place, but you may actually be, you know, hurting yourself and violating these fair housing regulations. Um, Yeah, you definitely do not want to use any sort of language that, again, targets specific residents. Offering discounts to a specific type of tenant or tenant profile is also a violation of fair housing. And then when you do start to get applications, some things to consider as well is you cannot restrict the number of people that are living in a home based on the bedroom count. You cannot restrict on source of income. So if someone is utilizing a housing voucher, student loans to pay for their housing, any sort of other income other than, you know, what we'd expect as just a job, it is, as long as they're getting income of some sort, is a tenable source of paying for their rent. And then in DC, even one of the protected classes is political affiliation. So make sure that you're, aside from the obvious ones that we all hear about, make sure you're checking with all those boxes too to make sure you're not inadvertently violating someone's rights just based on someone that you may not want or may not think you want as a tenant. And from there, I will pass it over to Pavan to speak on our next slide.
Thanks, Ezra. Hi, everyone. Do you want to talk a little bit about the business of owning a property in DC? You know, both for the accident, you know, we talk about the accidental landlord and the sophisticated investor. Doesn't matter if you're an accidental landlord, if you're a person just like some of us are. When you own a property and you place it into rental in DC, you're running a business. And there are requirements from a tax perspective and there are requirements from a DC licensing perspective. You need to get a basic business license to rent in DC, and you need to keep it updated. You need to renew it every 2 years. There's Emily alluded to this, but there's certain properties that you buy that may need a certificate of occupancy. If you've got 2 more units, if you're a building and has 2 more units, you need to get a certificate of occupancy. There's a whole separate, to get your BBL and to register with the rental housing division, there may be one application and one type of inspection. There's a different one for the certificate of occupancy. So you really need to sort of read up, learn, find a lawyer or someone else that knows about this, and make sure you understand what all the requirements are. If you are going to buy a row house that has an English basement and you are going to use the English basement as an investment vehicle, which a lot of people do, that basement needs a certificate of occupancy, BBL, all of that. And you know what we run into in DC is those basements may not have the height necessary for a certificate of occupancy. So if that's your plan, you need to, before purchasing, go in and make sure that that basement that's advertised as a rentable or whatever it actually is. You need to do your own due diligence on there. Talk a little bit about insurance. In a condo building has a master insurance policy, but you as an owner of an individual unit in a condo or co-op need to get your own insurance policy, which will cover everything in that unit. Will cover lost rent if something happens and your tenant needs to move out. I will tell you, I have a condo and there was a fire in the building, sprinklers went off, my unit flooded, everything needed to be redone, sort of, floors, countertops, all that sort of stuff. My tenant had to move out for X number of months. I had good insurance. The adjuster came out, I got a check within like a week, and I actually ended up doing some upgrades to the property, and it all worked out great because I had good insurance, right? And so when I say good insurance, I'm not going to tell you who to get insurance from. If you got USAA, you beat us all. But I would go with a reputable insurance company. Esther talked a little bit about fair housing, laws and rules, tenants' rights. You want to, there's a group of attorneys in the District of Columbia. They're landlord tenant attorneys, and they practice primarily in the landlord tenant court. I don't know how many, it's like under 100. There's a finite number of them. Become friends with one of them or hire one of them to be your lawyer, because if you're going to have a tenant, you're going to need to have a landlord tenant lawyer ready in the event something goes wrong, in the event you do something in terms of they don't pay their rent, they need to escrow their rent. You really want, as part of that team that we talked about. So you're gonna want to understand tenants' rights. In DC, you can't, you may have a 1-year lease, but that lease by law goes month to month. You can't just kick someone out. And there's a whole web of laws that apply to that. And you're going to want to understand that. You're going to want to understand TOPA, the Tenant Opportunity to Purchase Act. It has been weakened in recent years because single family housing has been excluded from TOPA. But it used to be that if you're buying a condo and there was a renter in there, or a house or whatever, there was a renter in there, that renter had a right and could sometimes could do things to try to hold up the sale. And so that it may not be as applicable now, but if you're looking at something that has a renter in there, you need to just make sure that that's not something you need to worry about. Again, you can consult with an attorney for that. And service animals aren't pets. So if you don't know what I'm talking about, then another reason why you need to do your research. You're allowed to restrict pets in rentals, but service animals aren't pets. And so we all on this call can tell you stories about people that did not want pets in their property, but it does not matter. Again, there's things that happen. It doesn't matter because they ended up getting a tenant with a service animal. You're not going to be able to predict everything that happens, but what you can do is prepare. And I think the best way to prepare is the things that we were talking about. Get an attorney to be able to guide you through things. Make sure you've got good insurance, and make sure you think of this as an investment property, even if you're the accidental landlord and this is, the place that you met your spouse and fell in love and got married. Once you move out, it's somebody else's home. So you need to remove that emotion. My advice is to remove the emotion from that particular unit and think of it as what you're here for and what it is, which is an investment vehicle. So good luck to you. I hope you have a great success in owning. A lot of us here on this call do. I have 3 properties in DC. I find it incredibly fulfilling to be able, like Lisa said, to provide good housing for people in a fair way. It brings me a lot of joy and a lot of happiness. So I wish that upon all of you too. And with that, I am going to turn it back over to Steph.
I think you took the last slide, Pavan, which was preparing, which is great. We talked a lot about things that are unique to DC. I did want to bring up one thing that has nothing to do with this slide, but it will likely come out in questions potentially shortly. In DC, a legal bedroom is one with a window and a closet. And that comes up a lot in terms of purchasing. So I just wanted to put that out here in case you don't take anything else away, but you are purchasing a property. A legal bedroom, to be able to sleep a person in that room, has to have a window and a closet. So anyway, back to preparing for good times and bad in housing. We talked a lot about this, so I won't spend too much time on the slide, but making improvements for the long haul. The biggest thing that comes to mind here would be wanting to do a cheap fix, as Esther potentially mentioned about, like, if you wanted to put a carpet in. A carpet is going to last for likely 1 round of tenants, and then you're going to have to replace that carpet during turnover. It also is not as appealing to tenants looking for homes. So potentially in this newer market, you might want to upgrade to something. There's a lot of porcelain tile. There's like some different options that owners are going with. You don't have to get, the best hardwood flooring that, you're going to be upset when that service animal potentially goes into the home. So we want to make sure we're making smart decisions there that will lead you to more savings and potentially appealing to more tenants. Short-term savings can lead to long-term headaches. Kind of goes back to that point of like trying to make a quick fix. Your tenant's going to be upset, could potentially be upset. It could lead to more maintenance. It could lead to, that toilet flapper that didn't get fixed could cause the water bill to be $2,000. We've seen that happen before. It's not anywhere that we would want you to be. So again, trying to make sure you're saving yourself from those headaches. Higher rent doesn't necessarily equal higher profits. What we mean here is we want to, I think we all have talked about this before, of like wanting to make sure that, you might not be getting the most money that the top of the market, but you might get a tenant that, again, is going to have a great experience in the home. They're going to see the value in living there. They're going to want to renew year after year. That is going to hopefully make this rental pay off in the long run. And that's the goal there, is to have a tenant that wants to stay year over year. Typically we see in the smaller houses or smaller square footage properties, 2 to 3 years is a really good time to have a tenant. And then potentially they grow out of that unit and move on, and we find a new tenant. So again, not necessarily the higher rental rate doesn't necessarily get you the best tenant over and over. Happy residents in excellent spaces is higher returns. And then we talked about planning for vacancy, for turnover, and for improvements along the way. Having a plan for emergencies, I don't know necessarily that anyone planned for a pandemic, but here we are. And the city is doing a lot and putting out new legislation, new grants, more resources day after day. Pavan is staying like updated on those and letting us know what those resources are. So if you do find yourself in this boat, definitely stay tuned or stay informed of what is happening and what resources there are for you. Because I can tell you right now, we have a lot of tenants and landlords who are hopefully in the business of getting some much needed help. So make sure you just keep yourself informed. And we will go to Lisa.
Okay, so this is our last slide before we jump into questions. So be ready to drop them into the chat. But basically the investment flow, you'll see that, you make a purchase, you need to prepare that property, understand how it is that you want to put it into service and use it. You want to be thoughtful about your promotion and advertising to be sure that it's compliant and consistent with all of the fair housing regulations that Esther did a really nice job of walking you through. And then once it's occupied, you don't stop paying attention to it. It's not a one and done or out of sight, out of mind. You want to make sure that you have a good cadence of maintenance, preventive maintenance, and other things that help make sure that that resident in the property is having a really stellar experience. So with that, we're going to go ahead and open it up for questions folks had. We had some folks, and we can make the slide deck available. We did have a couple advanced questions that I'll kind of jump into about financing and where to find financing as we wait for any other questions that pop up. In this market, we know that interest rates are attractively low, and they'll probably stay that way for a while, but that may not be the case if you're pursuing a rental property. That's because lenders are seeing that environment as riskier, likely a little less so in the district proper, but that may not necessarily be something that sort of eclipses their interest in funding. So you may not have an easy a time financing a rental property as you might a single family or a personal residence at this point. But all that said, mortgage companies that you would traditionally do business with should be able to walk you through what the requirements are for lending. But you should have the expectation that you need to come in with a larger down payment. Typically 20% is the minimum down payment for a rental property that you won't be occupying yourself. We have some questions about how the rental market's been hit by COVID. And that's a good question. I think that there are probably different companies would offer a different answer because they're having different experiences. As our company has done a very particular job of curating a really high quality portfolio, we have not seen delinquencies that are astonishingly high, but that said, they're still impacting our business. And we're seeing between 5 and 7% of our portfolio struggling to make payments during this period of time, with the expectation that they're catching up. Many are catching up throughout the month, but still hitting a snag when it comes to finding the income to satisfy their obligations. And that's challenging and tricky. Part of our work has been in helping find support programs for tenants that are having a hard time making rent. And we feel good about that activity. But still, we're finding that people are moving, not at the same clip they would in a pre-pandemic environment. There are a lot of different considerations. More people are working from home. What's attractive in a rental has changed significantly. I can tell you that we would all agree across the industry that the unit size suffering the most during the pandemic is the one bedroom. We find that from our real estate sales professionals that they're not selling as quickly and not nearly for as much as folks might have hoped pre-pandemic. And from a rental market, we're just not seeing them rent as quickly. And I think that is consistent with anybody's expectations, given that, who wants to spend $2,000 plus on a property with limited space in a city you can't enjoy right now. But all of that said, with a vaccine on the horizon, we do expect that trend to shift, but likely not bounce back for some time until we start to see people find the city more attractive. I would also offer that the Biden administration will likely make being in Washington, D.C. proper more attractive to a lot of millennials and younger folks who might not have considered living in the urban core as interesting, and with basically reduced values in the one bedroom marketplace for rentals. You may be seeing people that are considering moving into the city that might not have otherwise because it's a little bit more affordable. So lower prices isn't a bad thing. You just need to be able to weather that. Condos with outdoor spaces are also going to perform better. So obviously, if you want to be the most informed investor, one of the best data points you have is what you would want right now, which would be a little bit more room to roam, a little bit of space for safe, fresh air, or convening safely with people when you have to stay 6 feet apart. All of those things are going to be just as appealing and attractive to a resident as they would to you. And as Emily noted earlier in our presentation, houses are going to be in higher demand. And houses are also, finite in supply, whereas condos, there seems to be, I mention this often, kind of an infinite supply and more coming, and almost like a per person condo explosion. When you have a high saturation rate of any kind of housing stock, you're going to see the values shift accordingly. But with houses that are still true houses and have not been split into multi-unit condos, you're going to see more ability to be creative with that investment and likely just a more stable rental pool. Any other questions that we have that popped up? You can just chat them in.
Lisa, I think you kind of touched on this with size of the unit, obviously with like the COVID lens. But sort of when you've made purchases in the past, would you say size is the most important factor when you're looking at rentals, or is that kind of tertiary to all the other information?
It's absolutely, that's a great question. I think it's absolutely something you want to consider carefully. So any property will perform best when it appeals to the highest number of potential residents. So, a studio, if you're going to start at the bottom, which doesn't mean it's bottom in terms of value or excellence, it's just the entry point is limited. You're not going to have as many couples interested. Roommates are obviously more limited in that environment. You're looking at someone that's an emerging professional or a tradesperson who has a lower rental cap for personal expenses, and then is likely going to want a little bit more elbow room. So you're going to see higher turnover, which means you're going to have more consistent turnover expenses and things of that nature and operating costs for that property. But that said, it doesn't mean it can't perform well, but you're limiting the pool of people that you can appeal to. If you're going to buy in a condo, I think certain things like creatively visualizing who would be living in that property. So if you have a 2-bedroom with 1 bathroom, a roommate dynamic is harder to deal with. I think for folks that just don't like sharing a bathroom, a 2-bedroom, 2-bath makes a roommate scenario a lot more attractive. So if you're looking at 2 units and one has 2 bathrooms, then the 2 bathrooms, even if you don't like the unit as much, somebody else might like it more. So you're actually like opening up the possibility for people to use it with a larger number of potential residents. And then you just sort of work from there. And sort of the opposite might be true. You have the studio and you'll have some limitations there. If you decide you have a 5-bedroom house and you're in the $6,000+ a month mark, you're similarly limiting the pool of potential residents that you have that would be interested in that rental. It's a high price tag. It's not as achievable for folks. So, you want to think through that paired with walkability, the pedestrian component, public transportation, commutes, and things like that. And also factor in like, how are those things going to be changed at least in the short term and likely for the long term when it comes to how people use spaces and get to and from work and home. And for many of us, they may stay as one and the same. Some folks talked about moving back and forth overseas. Investment properties can be really great when folks, buy something and then they're sort of out in foreign service or state, not in the area, not local, but they have either a friend or management company or they manage remotely. And we're not intentionally not talking about our services as an option because you can look us up when you need us, but the goal here is to just inform folks. But yeah, I think it's a really smart move to have a property that, you're not only just experiencing the income side, which is the rents, but you're also having someone else pay a mortgage perhaps that's reducing your principal over time, and you're also able to see an appreciation of that asset. So I do think that it's not a bad idea but if you are not local and you're intending to self-manage, there are barriers to that going well, and the tenants will figure out really quickly if it's not going well. You can get lucky and have a tenant manage your property, which I've done many times very successfully, and I should hide that, but it can work out very nicely when it happens. Some folks have talked about owner-occupied multifamily homes. We talked the fourplex. There are a limited number of fourplexes. Everybody wants one. And everybody's asking us if we have them. They're hard to find. They typically in district proper, a 4-unit will be a 4-1, meaning there'll be 4 units with 1 bedroom. So again, you're going to find yourself with 4 1-bedroom units instead of 1. And we already said 1 can be hard. So having 4 of them will be 4 times harder possibly. And then if you're living in one of those units, it may be a little bit closer to home that they're not renting as easily or as quickly as you'd like them to. But that said, depending on the cash flow, they can certainly be a good long-term investment for folks. And one of the smartest things you can do if you're interested in buying property is to live in it for a while. Buy it as an owner occupied property. You enjoy all of the different more easily captured financing for that, and then you convert it into a rental later. So that is precisely how I captured the own small portfolio that I have, and I know others who have done the same thing. So it can make things a lot more achievable, and then you can lean on the rent to qualify for more later, and then you can use that property to leverage it, buy another property later. It's in terms of an LLC, you know, the Washington Post had an article that could make the case for forming an LLC and moving a property into that LLC or not. And there are pros and cons on both sides. I mean, basically a lawsuit's going to pierce any veil. Like, you're not going to be able to, you know, shield yourself from the exposure and the legal vulnerability that you might have as a rental. So the LLC won't necessarily protect you, but it can offer some different, it can anonymize you, which is helpful. If you're not interested in having your tenant know who you are, the LLC can achieve that for you. It doesn't necessarily protect you from anybody who's litigious. If you're looking for folks that want to buy into a partnership where, you know, they're jointly owned assets, then an LLC can be really a smart way of doing that. Do keep in mind that if you're an LLC, you're subject to different kinds of regulatory requirements in the district with regard to how you manage that property. So rent control and other things can kick in for LLCs that wouldn't normally kick in if they're owned by someone who's not doing so within the LLC. And DC neighborhoods that are having long-term potential for essentially, you know, the farther out you are from the urban core, the lower the dollar value you'll likely get in rent, but the higher likelihood that you'll have folks that might move in and stay for the long haul. Because people that are living in single family homes tend to be settling down as families. That's why family is in the description. So people, I mean, even people with pets, and people have asked me, like, you know, how do you feel about renting to people with pets, and not just service animals, but pets? People with pets don't like moving. And so if you want someone that stays put and settles in, pays their rent, and has a great experience, if you have dogs, get some boxes out one day and see how they react. Like, people, you know, don't like disrupting their dogs in the same way they don't like pulling their kids out of school. So all of these things can help you achieve a scenario where you've got a tenant that stays put for the long haul. And even if you're not achieving that highest level of rent, you'll truly make more the longer your tenants stay in place and treat that property well. And I know we're running over, and I'm going to end on one point, and we can invite people to sort of ping us on with questions after the fact, and we'll find a format to answer questions for folks. But one of the questions that I get often from either friends or investors or clients is, you know, I have the perfect tenant in mind. I had someone tell me recently they wanted a retired librarian specifically was their in their mind the ideal tenant. And a retired librarian could be a good tenant or a not good tenant. The idea that we profile someone as being a high quality resident is basically trading on stereotypes, and a very natural thing to do. But we've seen owners treat properties very poorly. We've seen tenants be the best thing that ever happened to a unit. The best tenant is a tenant that pays rent on time, treats a property respectfully, and works well with their manager. And that person can be any age, from any background, and doesn't necessarily need to be from an embassy or have any other you know, checkbox qualities. But we've had exceptional relationships with all kinds of folks living in our properties, and it's been one of the greatest joys of having this company and being able to do this work. So an open mind is really valuable. And with that, I'm going to thank everybody again for joining. The questions were really rich and interesting. We will be repeating this series again. So if you didn't get all your questions answered tonight, stay tuned, and we'll look forward to seeing folks again soon. And we will send this out. So thanks everybody so much, and have a really great and healthy evening.